Hi, thanks for joining. My name is Ronit, and with my co-host and partner in crime, Gaurav, we're talking about tech, finance, and the future of digitized or blockchain-based trade finance in this episode. Our guest today is the one and only Bob Blower. Hello, Bob.
Hello there, Ronit. Hello, Gaurav.
Now, we're going to talk all about blockchains and this chains and that chains later on in this conversation, but I want to start by going back to the dawn of time. Before we went live, you were claiming, Bob, that you, in your job at Her Majesty's Treasury, operated the first desktop computer. Is that right? Did you just make that up?
No, I so it started off. I arrived in the Treasury from the Ministry of Defence, and been given some access to some quite fun tech while I was at the Ministry of Defence.
What were you doing at the MOD?
Yeah, I was there.
Oh, you were sort of bound by the Official Secrets Act or something.
I worked for one of the organisations which is disavowed. So
my word!
Wow. One of the joys was
you have a golden gun.
I used to one of the things I used to do was to approve defence sales to overseas countries.
Really?
So my very first job there was to look at satellite photographs and count the number of Challenger tanks, as they then became, but in those days were called Iran tanks, which were in the parking lots of the Islamic Republic of Iran, to see whether or not they'd sold any of them to the Soviets after we'd sold them to them. And to also count the American F-14 Tomcats, which had been sold to the Iranians by the Americans, and see whether or not they'd been sold to the Soviets. And
which year was that, Bob?
That was 1978.
78. Wow.
And then
so you're looking at satellite pictures of Tomcats and Challenger tanks, and
see if they'd moved any out of the car parks or tank parks or whatever we call them.
It's a trivia question, right? Would you call somebody you park a tank? Yeah.
Then I had the joy of going out to Norway to witness the test firing of surface-to-air missiles in January at minus 50 degrees centigrade.
How far up north did you go?
All the way up into
right to the top.
All the way up into reindeer sort of territory.
Yeah, that's further north than Iceland. I was looking at the map today because
they wanted to check. In those days, you had to put thumb to steer the missiles. So they were attached by a wire to the launcher, and you then sort of fire them off to see whether or not you could hit any aircraft with them. And so I had all that sort of technical background there, but also, my local authority had very kindly let me sort of mess around on their computer when I was a kid. So I did basic and things like that at school. So when I got to the Treasury, for one to sort of try to find out why on earth I turned up at the Treasury, given that I'd started my career in defence, they sort of, I started off working with a team in the which did the macroeconomic forecasting for the budget.
Right.
So my job was to coordinate the budget sort of package, in terms of making sure that all the different pieces of speech get together, and that sort of thing. But in doing so, I got quite interested in the technology around it, and so we had this big mainframe upstairs. I think it's ICL computer upstairs at the Treasury, and in a huge, great room with massive air conditioning vents, to keep it cool. And then I'd take bundles of my code upstairs every day, which is basically on cardboard cards, and put them into the computer about 11 o'clock at night, along with some other batches that other people were putting in, wait for the batch to be rejected, then go in there and find out what it was that I'd sort of put wrong into the coding sequence. In those days, the memory was probably less than sort of 1/10 of what an iPhone currently has. And
5 MB tape drives, right?
Exactly.
Yeah. Don't ask me how I know that. That's another conversation.
And then we put the package back in again, and then it would reject it again, and carry on until about maybe 4 o'clock in the morning. I would get sort of the readout, which was a regressions analysis, where we'd sort of look at sort of different economic variables together and work out if there was any correlation between the economic variables. And then later that morning, after I'd had a bit of a sleep, I'd come back again. I had a group of operational research students from Malaysia who were at the LSE, who came and helped me transfer the data then onto Tektronic machines, which we would then use to create graphs. And yeah, it was an intensive effort, to be honest, trying to do that. But anyway, in the effort to try and sort of make my life a little bit easier, I think it was 82 or 83, the Treasury procured an IBM PC. Well, and they said it was like the first or second IBM PC in the United Kingdom. And for a week or two, I was fascinated by the fact it could play the Japanese song Sakura, sort of in the electronic tones on it. But then eventually I started loading data onto it. And because one of my jobs was to report to the cabinet on sort of what was happening in the money markets and what was happening in the bond markets, etc., I started taking the data from the market reports and putting them onto the machine. Because of that, you know, the economists got all excited and they said, "Oh, this is brilliant! We've now got daily series of interest rates and things like that, which we hadn't previously had. And we can start to regress that against monetary, you know, money supply and things like that." And so I spent a lot of time then with, you know, people like Gus O'Donnell, who was then sort of, you know, now Lord O'Donnell, sort of, but who was then sort of the group economist in monetary policy. And Clive Crook, who then went on to run the Economist magazine. So my career has plummeted compared to theirs.
Now, get the first desktop IBM, so 82 or 83. Do you know when did computers arrive at the Treasury and in banks across the UK?
The mainframe was late 60s. But I was actually watching a TV program the other week.
Late 60s?
Late 60s. Yeah, and they hadn't really sort of, you know, up until then, you know, civil service was really about, you'd write memos to people. Even doing the money markets, you know, my job was to intervene in the money markets every day and to lend money to the banks to make sure that they didn't go overdrawn with the Bank of England. And to do that, I used to get a foolscap sheet from the Treasury accountant every week, showing me what the forecast position was on a daily basis for the next 3 weeks. And that would then allow us to position, you know, how much liquidity we had to put in the money markets. Because obviously our goal as part of the monetary policy was to keep the overnight rates as stable as possible, which sometimes I succeeded at, sometimes I didn't succeed at. Yeah, sometimes the rate went up to 90% and things like that because we left the banks too short. But you know, it was really quite manual. A lot of, you know, the work we did, and of course, yeah, I think the move to monetary policy really sort of drove the interest in technology, because for the first time, I think they were following something other than sort of an Adam Smith-esque type of of economic policy. Because up until then, sort of economics was really more like moral philosophy, I think, rather than sort of a technical thing like econometrics. So to me, it was a big step change in the way in which policy was done. There was, yeah, people like Howard Davis were still writing memos which were entitled after weird Norwegian poems. And you know, I still remember, you know, asking him one day, why has he written this memo about more reindeer? And he explained to me that it was some analogy to some Norwegian poem. So it was very, very different. So it became much more technical, much more technocratic. And of course, at that stage also, we were then preparing to introduce the first electronic settlement system for UK government securities. So I was involved in putting together the Act and the regulations for the Central Gilts Office, which took essentially a bunch of paper-based ledgers which were filled in down in, I think it was Gloucester. So you'd send off your forms sort of saying you bought a gilt, and they would then take 3 weeks to process that sort of that transaction and move it from this part of the ledger to that part of the ledger. And we had all sorts of weird ideas around sort of ex-dividend and cum dividend and things like that, which was about, you know, how you adjusted for the interest while the transfer was going on.
So banks, central bank, Treasury, the Ministry of Finance, and the commercial banks in the UK, mainframes arrived in the 1960s. At some point in the 60s, to the big banks how did that change the way, say, commercial banks operated? What would happen before mainframe computers arrived? What happened after? And
well, everything was operating on ledgers. But even in my day, right at the beginning, I remember sitting in Barclays Bank Treasury, and they had a bank of telephones with a bank of young ladies, who would phone each of the branches around the network of Barclays Bank to work out what the cash position was in every branch of the bank, write it down, bring it all together, and that would then be part of what they then sort of came together and then asked me to fund. In terms
and this is when? This is the 1980s.
This was 1981, 82. Yeah.
So 81, 82, you'd have had a bunch of people at Barclays Bank in head office.
Yeah.
Calling around the branches going, how much cash you got?
Absolutely. So the sole information I had available to me at that time, I had two conversations every day. One was with Second Marshal of Campions, which is the money broker. And they would tell me that things like the money market was looking a bit soft that day. Now, what the hell does a bit soft mean? Now, of course, what it means is that it looks like the interest rates are going to be coming down a little bit. Therefore, we can tighten policy a bit more. And equally in the gilts markets, I talked to Mullins and Co. and Lord Cromwell, who was then the government broker. And he would tell me, I'm seeing a bit of demand at the long end today, and we would see it. And until that all changed when he fell off his horse and he broke his neck, and we decided that it was time that we sort of should replace this somewhat arcane system with gilt edge market makers. And so we then moved, along with Big Bang, to creating sort of the system of gilt edge market makers, who then plugged into this electronic ledger. And then you get the big American investment banks, Salomon Smith Barney and so on, coming into the marketplace, and with their tremendous understanding of technology and everything else, beginning to change things quite radically, sort of around 83, 84, as we moved into the introduction of things like SEAC on the stock exchange, automated quotations, and Taurus, which failed, which was the electronic settlement system for UK securities, equities.
So computers, desktop computers start spreading 82, 83 in government and in the big banks. So before then, you just had these mainframes that would sit up in the attic, right? I remember you telling me once. There was no air conditioning in the UK, so it had to be up somewhere cool.
Yeah, exactly. But even then, I don't think they were that well used. They were not used really sort of for a lot of functions. They were only used for the ledger sort of side of things. But a lot of the data processing was still very manual. And so that was, and that was just my, going around to different banks. What really changed it, I think, was a couple of different things. One was when Mercury introduced the first IP network around the City of London, which was when the BT monopoly was broken. The Thatcher government basically decided that BT monopoly had to come to an end, and there was a proposal to put a sort of a high volume network around London, which I think then sort of allowed the banks to then, for the first time, access very high speed cables. Because, again, one of my favorite subjects is, if you look at Swift messages, they're all built for the days when we still have copper wires. And we had very structured messages which didn't take much space up on them.
When did Swift start, Bob?
Sorry?
When did Swift start?
71.
Wow.
But it was very, very tailored. Even Reuters, where I worked, we had things which the Reuters identifiers for currency codes, which again were all designed to be copper wire based, so that you could take up a minimal amount of space.
So there's this world of Swift and almost a world from the age of telexes, right? Swift is a telex. It predates desktop computers. You go to the telex machine and send a message, and then we get desktop computers show up a decade later. Meanwhile,
they're not linked together.
Background in the 60s.
Yeah, but they're not linked together though. That's the thing. And this is,
Yeah.
I have a very good friend who's a Chinese professor of computer science, and he always lectures me about this thing, which is computing originally started as distributed. Sorry,
Yes.
it was sitting in rooms on its own, and the only way in which you could transfer data was through a tape or through, later on a disk. Then it became centralized, largely because of the lack of network capacity.
And when does the centralization happen?
That was happening then sort of into late 80s, early 90s, where companies like Cable and Wire, so I also worked for, who were buying sort of were laying fiber optic cables around the world.
Yeah.
And they were sort of trying to replace their copper networks, whilst at the same time building data centers, sort of around the world. And I remember, we had these big data centers which we bought when I was at Cable and Wireless, belonging to, I forgot the name of the company now, but they were all compact computers, basically Microsoft based computers. And I remember saying to the guy who was responsible for these things, I said, this is rubbish. If we're going to do something, we're going to have to move to Unix. So we did a deal with Sun Microsystems, and we sort of, a couple of $1 billion later, we refurbished the entire, data, all the data warehouses we built. Exodus was who we bought, and that then sort of meant that we, for the first time, could start centralizing things. But my first customer was Ocado,
the grocery delivery,
who I still remember it. I had to get my American Express card out because the Unix server had been ordered but not paid for, and Sun Microsystems were refusing to release the computer until it had been paid for. And I had Ocado on the other side hammering me, and of course they were backed by Goldman Sachs. So I had to get my Amex card's limit increased so that I could actually pay for this computer.
Now, this whole thread around centralization versus decentralization, that your friend, maybe you can name check if you want to.
Professor Tsai.
Professor Tsai.
Tsai, yeah, he's at he's a incumbent professor at the Beihang University of Technology in Beijing. He's an incumbent professor at Wisconsin State and the Arizona State.
Let's just expand on this point of centralization versus decentralization. It's kind of interesting one, isn't it? That actually in the 60s and 70s and early 80s, computing was decentralized de facto, right? You get these massive mainframe computers, and then you get desktops, but they're like linked into local networks rather than when does finance, like the bond markets, the financial markets, when do we move to CSDs, centralized, whatever? When did it start getting centralized? And then when did you personally start getting interested in the whole topic of decentralization again at the ripe old age of whatever? And I mean, most blockchain bros and crypto bros, Gaurav and I know, like are 25.
I'm 63, so don't worry.
I wasn't going to reveal your age on
no, that's all right.
You just asked yourself.
I think for me,
you've kind of done a whole this journey of
the whole cycle.
Amazing, yeah, it's amazing. Most people who are 25, no disrespect to 25-year-olds. I mean, some of them are way smarter than Gaurav and I are, but I mean, it's almost like for them, it's like this brand new paradigm. Decentralization, and this is like taking you back to when you were 25.
Yeah, I think
things were decentralized.
No, I was very interested in the computing side of things, but I was also I was somewhat irritated, if you like, sort of daily basis by the arcane way in which we did things in the Treasury. And I was very much keener on the idea of, how do we sort of move things forward? Now, fortunately, the government of the day had similar ideas.
Right.
So they had, obviously referred the London Stock Exchange to the competition authorities for their restrictive practices. There'd been a deal done which allowed those restrictive practices to be set aside on condition they opened their membership. And then opening their membership then, of course, brought in this huge influx of money from US investment banks and so on, who came in at the same time as the stock exchange was moving off from floor trading to electronic trading. And then separately to that, we'd been pushing through from the 82 Act the centralisation of gilt-edged processing, so that we could borrow more money more efficiently, so from many more people, and so the whole of the city of London at that stage was changing from being this very, very sort of discreet bunch of people who, literally we used to have people wandering around the streets of London in top hats to show that they were sort of on business, and they were about to go and borrow a couple of tens of millions of pounds, and to ones where sort of all of a sudden you've got rooms full of data processors that basically putting together sort of the data to allow things to move more quickly. And of course, as things move more quickly, so the people had to move more quickly, and we became much more global as a result.
Yeah.
By the time in 1982, we sort of, 1986, we introduced the Financial Services Act, which was to regulate this activity that we'd unleashed. Which is the Securities Investment Boards and all the other things, which are now the FCA and so on. That whole regulatory structure, which was then also beginning to move into Europe as well, was driving this innovation that was coming through. Because suddenly banks, which previously had got capital sitting in the UK, but couldn't use that capital in, say, Switzerland, were passported into Switzerland, so they didn't have to use a separate bunch of capital, which was massively important, particularly with the Basel Accords coming on board. So there are all these things happening over that period of time. So really for me, I began to become a bit interested in the blockchain. Well, first of all, I got interested in XML and things like that back in 2000s, when that was beginning to sell customers. This is my jibe at Swift, which is that in 2002, a guy called Tom Bushman started a working party called Twist, which started looking at creating an XML data model for back office operations. That is now ISO 222022. So 23 years later, or whatever it is, Swift have finally sort of implemented it. And indeed, my own organization will go live on ML this month. So
22 in that ISO blah blah is 22 years it took to get it done, huh?
That's a good thought.
Yeah.
But
so you get into blockchain and
then the blockchain thing. I started reading about it sort of just at the tail of my time when I was running financial institutions and trade finance at Standard Bank in South Africa. And my technology guys at the time poo-pooed the whole thing and said that we don't see any purpose for this. And then by a series of weird coincidences, some friends of mine were having dinner with some Chinese government officials, and I was invited to go to Beijing to brief a lady who turned out to be a senior member of the policy team which runs China's internet. So I went over there and had this series of quite strange meetings where the first one I was asked, Mr. Blower, what do you think about this thing called fintech and blockchain? And I sort of I just made some stuff up. And my treatise was that sort of actually blockchain, as I understood it, because I'd come from the days when ledgers were formal documents. Was going to be something that potentially would be transformational. Sort of. I still hadn't at that stage, I don't think, understood fully the DeFi sort of elements, but at that time, I really thought the processing, the computer processing, and everything else would be really exciting, and particularly the idea I would no longer have to rely on people like Oracle to do things. I'd really been quite irritated at spending $300,000 on a copy of WebSphere just to sort of process a bit of data, inside a bank. It's just outrageously expensive. So I sort of started collaborating. They asked me to start collaborating with Professor Tsai. He and I produced a paper which we presented at the W3C conference, and that's the Oxford Cloud Computing Conference, on blockchain and how it could be applied to finance. And that paper argued that the existing methods that people were talking about at that time were insufficient to create enough of a sort of push towards people using this technology as mainstream. But nevertheless, from China's point of view, of course, they're very excited about the possibility they can get around these big American tech companies, which control so much of their technology. So,
is that how they got interested in blockchain? In your view, is that
sorry?
Is that the kind of genesis of Chinese interest in blockchain technology?
Well, I think from their point of view, is that they were, they're always very interested. And one of the things that happens in Asia is it's like, I dealt with last time, as with Japan. They tend to study things. So it's the Confucius sort of way of doing things, which is give it to a professor. The professor will sort of study it, produce a learned report, and then industry will look at that report and then make up some minds about what they're going to do about it. And of course, in China, you also have the political angle to it, which is, the Chinese bureaucracy doesn't necessarily want things to happen without them knowing about it. So I put myself into two mindsets. I put myself into the mindset of, if I was a Mandarin sitting in sort of China, what would I be interested in? And on the other side, sort of how competitively could you use this technology to bring about a complete change in in the way in which people did things. And that was quite interesting working with Professor Tsai. We worked with the central bank there, people in Max China, the CDC, the China Development Corporation, all sorts of different organizations like that, and as well with some of the big technology companies there. So I spent about 2 years wandering around these different organizations, having good conversation with them, and also talking to some of the investment people there about sort of where they should be investing their money and so on. And at the end of it, I was sitting in a hotel room in Bangkok, having just been to. This
is a PG conversation, by the way, Bob. Just want to break it here. I know what you're about to say.
I decided to take a bit of a rest, and I sat in this hotel room in Bangkok, and I was sitting there. And the previous week, I'd been in Hong Kong for the FinTech week there. These couple of guys had sort of asked me to give them $500 for to put into their ATM machine so they could send me a Bitcoin. And I sort of, and they, had some wonderfully funky hairstyles and everything else, and I just thought, why would I do it? I just couldn't really sort of explain to myself why I would do it. Why would I give them 500 hard-earned bucks for them to put it into a machine and send me the Bitcoin? And then the result of that was that I was sitting in the hotel room and I was thinking, well, actually, the problem is that you need to link it to something tangible. And at that point, I started thinking about, well, what would happen if taking some of my background in securities lending and sort of that sort of thing, if I create a security out of, say, gold, and then link that to a general ledger, sort of basically running on a blockchain, and then link that to the payment systems. I would be able to effectively transfer liquidity in real time around the world with very little risk. And of course, in Asia, they value gold a great deal.
I want to bring Gaurav into the conversation because we're getting at that stage where we're about to start talking about building companies and your latest and greatest entrepreneurial phase. As the entrepreneur in residence for this podcast, I think Gaurav should take over the questioning.
with pleasure. I've been, what a conversation it's been so far. I just have to say it's been, we're taking no prisoners and having a great background story on your personal journey to where you are today. So Bob, with that, and thanks, Ronit, tell us about what you're up to today.
Yeah, so this is my first entrepreneurship. So back in 2002, I departed ways with Reuters after the executive director I reported to got drunk, and asked if he was going to be the next CEO, and he was told that there was actually going to be a search for his job, so he wasn't going to be. So he walked out of the company, and then shortly afterwards you had the predictable reorganization, and I left, and one of the parts of that was we created a company which built a platform which linked together 36 of the largest banks in the world in real time to provide account details. So JP Morgan was one of my biggest, was one of the investors, one of the biggest clients. They put me through the whole hoops. They sent a whole team over to London to understand what it was that we were doing, what skills we had, if we had any, and various other things. So they gave us 180 recommendations. They said, "You give us that. You do the what's in this list, and we will give you some money to help you achieve it." So we rolled that out over 3 years. I sold my shares in the company. Then I went off to do consulting for a while, and then I ended up taking the evil coin from the banking world in HSBC. But you know, most recently, I was starting on this chain of trying to create this gold stable coin, and I'd been working with a couple of crypto exchanges in Hong Kong, sort of where they were not as bought into the idea as I was. They were still stuck on the idea of trying to replace Tether with a dollar-based stable coin, sort of based out of Hong Kong. Unfortunately, we couldn't at that time find a bank which would be willing to take the cash. And of course, as we've subsequently discovered, those banks that did take the cash are some of the most unstable banks of the world. And you know, the Federal Reserve is currently picking up the mess that's been created by that. So I go back to my treatise of saying, look, you know, if you want to be genuinely distributed, you can't rely on the monetary system. You have to rely on something physical. And the three things which I think are most tangible in the world are gold, because nobody controls that. You know, secondly, trade receivables, so money which you're expecting as a result of having sort of done some business for somebody, created something, and then fixed assets and long-term contracts. So we're starting a journey. So we're starting a journey where we're sort of saying, okay, well, let's use gold as a proxy current account. Yeah, if you want to store your wealth, there's no better place to store your wealth. And then when you want to sort of to enhance that, then you can start bringing in things that you're expecting in terms of trade receivables, and then sort of then finally sort of you can look at of fixed assets and so on, as all part of a basket of assets which you've got. And this is a company thing. It's also a personal thing. So as I've said to Ronit before, you know, one of my visions is that, you know, I've got to that age now where, you know, I've got assets, fortunately for me, and I now want to sort of start unbundling those assets so that I can spend the money on unwise things like startups. And so imagine that if you take a leaf out of the derivatives book, and you know, if I sort of say to somebody, you know, young like Ronit, you know, or 22-year-old or whatever, you want to buy 1% of the value of my assets, and that will be, you know, turned into something when, you know, eventually sort of I cash it all in. Then you are actually achieving what's in markets called a natural hedge. You are now hedged against the future increase or decrease in value of that asset. So if you want to buy a house, you've got a choice, which you can put the money into a bank and get negligible interest, or indeed if the bank goes bankrupt, you know, get no interest and no principal, or you can give it to me, put it into a lump of gold, or into a house, or into a piece of property, or into a business, and then create value from that.
Oh, wow.
And I think conceptually that works really well, because up until now, people have tended to look at sort of the crypto world as being sort of one where it's about volatility, which is where it all starts. You know, when we introduced LIBOR back in '82, most of the traders trading in the marketplace, which drove the $13 trillion worth of value that came out of the market the first year, were people who were trading arbitrage. They were trading between the Chicago Mercantile Exchange, the CME, the Life, and the over-the-counter marketplace. So very little of it was actually linked to any underlying sort of real economic purpose. So the same is true of the FX marketplace. The FX marketplace trades $3.25–3.5 trillion a day. Less than 5% of that is actually linked to real economic value. You know, people buying and selling things because they need to feed their families.
Oof. So some deadly figures, Bob.
Yeah, and these are real figures. You can check them on the BIS website, etc. There's sort of but it's always been one of the things for me, which is, you know, because I've always had not so much socialist principle, but I've always liked tangible things. That if you can create a tangible advantage for somebody, then it gives them the ability to move on in life.
Yeah, there's a popular meme that's out very strongly in the last 48 hours, which is a van, an advertising van parked outside of First Republic, which says, you know, be your own bank, buy Bitcoin.
Yeah, exactly. Well, you look at what's happened, and this is a hobby horse of mine, but because I did monetary policy in my youth, I get very upset when I look at what they've done now, which is that you basically got a bunch of central banks who in 2008 collectively decided they didn't want to have a recession. And the way they avoided the recession was by pumping out free money. The result of that is that people who've got savings have no longer got savings. The people, they're not getting the return on their savings. They've no longer got the incentive to invest in things which are going to create a return for them. And then on the other side, the banks are taking money, this free money. They've got nowhere to lend it or don't want to lend it to you and I, because all they need to do is go along to the central bank and buy some more bonds. And then they sit on those bonds. And surprisingly, and this is the thing that really amazes me, the failure to understand that when interest rates rise, the price of a bond goes down. And with marks to market, that means that effectively, your price of the bond go down, you then have to recognize a loss. So now the Central Bank of England has told us that we're going to conservatively have to spend £100 billion to bail them out of taxpayers' money for the quantitative easing they've been practicing. And I look at this, I just think, there must be a better system than this, where we and even now we're seeing such centralization in the American banking marketplace that the innovation will get killed before it even starts because of the way in which these organizations behave. They don't want to see a threat to their markets, so they basically go in and buy out things which they see might be sort of happening. So the result, so I look at this and I sort of think, well, how do we as a fintech community really go about unbundling it and realizing the real vision, which I subscribe to 100,000% now, which is to give people the rights over their own assets, to remove the intermediary costs as far as is possible, and to then allow people to allocate their assets according to their own risk profile and their own desires, rather than having it sort of handed down to them.
It's super interesting the way that you look at it. You have to start somewhere, and gold as an underlying premise of how you're building what you're doing today. Tell us about how that works and where it works. Can you guide us through how? Because what you've talked about involves two categories of people, right? And I bring this up on every show that we do. There's a consumer side of things, and there's a business side of things, and both sides will want to interact with products and services based on a stable proposition of what you're trying to do is put that forward as an alternative to the ecosystem that exists today, that doesn't give back as much as what you could possibly give in terms of value, with a much more solid underlying base foundation, right, which is gold essentially. But walk us through how a consumer can engage with you and how business would engage with you, and which countries it happens. How have you set it up? What's the process? I've just one of the issues is, of course, is that sort of countries themselves don't like a competition. And a couple of years ago, I was talking to the Royal Mint. The Royal Mint has actually started their first experiments with blockchain. Then the Treasury got wind of it, and then decided that this could be a competitor to sterling if they went too far, and closed it down. Now, and it's an interesting point for me because it's an arcane point, so apologies for this. But if you think about it, if you buy a coin from the Royal Mint, you can't return it. If you buy a pound from the Bank of England, you can return it in exchange for electronic record or whatever. But the result is that sort of in ancient history, one of the fun things I did one year was to write the Chancellor of Exchequer's speech for the trial of the Picts, which is a speech which he has to give once a year to demonstrate to the Royal Mint that he's not undermining the value of the coin of the realm, under the potential risk that he would have his left hand removed if he was found to have undermined the coin.
No, of course, they don't practice that any longer. But yeah, this is quite a slightly humorous occasion every year. And but the Royal Mint, to my mind, would actually be the right organization to do this. If they minted the coin, which was electronic rather than sort of cash-based, they already supply huge amounts of gold through the sovereigns and things like that. There's a really good opportunity that the UK could steal the march, I believe, sort of by using them to be the sort of the ring. But as I say, the Treasury decided in their wisdom not to go down that route. They decided to stay with the Bank of England. So the Bank of England has instead gone down the CBDC route, and of course they're heavily influenced by the clearing banks that don't want to open up clearing to third parties. So they don't want you and I to have a direct account. Now, strangely enough, when I was a young Treasury official, you could have a Bank of England account if you were a certain type of individual or if you were a certain type of company. Except, of course, most Indian curry houses wouldn't accept your check because it said Bank of England at the top, and people say, you're having a laugh, aren't you? and indeed, rather amusing, there is also a town in Arkansas, America, called England. And there is also, if you want to, you can buy a Bank of England checkbook from the Bank of England, Arkansas. But if you wanted the official sort of thing, then the Bank of England is clearly sort of trying to push down that road of creating a much more closed system, which is not open to third parties, and particularly fintechs. And as any fintech sort of survivor in the London market knows, trying to get an account with Barclays or with HSBC or anybody else is almost impossible. I did a survey for the Payments Association a couple of years ago. We went around asking all these banks. They gave us the lovely marketing brochures, but in the immortal words of the banking system, words and figures didn't differed. So I think where we're getting to now is that if we've got an open ledger, and I've been working with two groups of people. One is a Brazilian team which has created something called the Interlock Ledger. It's a fantastic piece of technology. We've been running it for 2.5 years now, no fail on it, on a closed cloud. And then separately, Tiende, which is the Chinese blockchain, which is Professor Tsai has created. And the reason why we work with two chains is because essentially in China, they won't accept an outside chain. Anything that smacks of crypto or anything like that is verboten. So we work with Professor Tsai, and we create a certificate of value as opposed to a token of value.
And that's backed by a denomination of gold.
And then we have gold sitting in it. That's right. We then have a gold depository sitting there with gold in it. Now, the thing that particularly drives me is that I'm one of these people who really doesn't like traded markets very much. I don't like, even though I've created a few in my time, I'm really sort of about sort of value. And so I carried out an experiment, small experiment with a Filipino friend of mine a couple of years ago. So she's a young lady in the Philippines. She was a sports person. She retired from her sport. And I gave her some gold and I said, look, Judith, when you decide that you want to go into business or something like that, here's some gold. This is your pension. This is the thing that in the future you can look after you. And she'd done some research for me and things like that as well. So she was embedded with what we're trying to do. And I said, so what I want you to do is whenever you need money, just come to me and I'll lend it to you based upon the value of the gold. So she comes to me and she gets herself involved in this business, which is quite big in the third world, which is to buy secondhand clothes by the container load. She buys a container of clothes, she goes through it all, works out what will sell, what won't sell, and then she puts it up on her Facebook page. And then for local community people, and then people then come to her and buy the clothes from her. So essentially, on the one side, she's being funded to buy the clothes by me against the value of the gold. And then as she sells, she's paying down the loan.
Right.
And she's creating her own margin on top of that. And the result of that is that every month, she hopefully is in profit. And over time, she's gone from just over a holding of $1,300 in gold to just over $5,000 in gold now.
Oh, wow.
And that's purely because she's begun to understand it. I still remember the first time I gave some money to invest. I gave it to her and I said, look, this is to help you out. So she was trying very hard to do what she was doing at the time. She gave the money to her brother to buy a rice field.
Oh.
And I said, why on earth did you do that? How can you live off of rice fields? Because it only gives you rice once a year. And she said, yeah, but it's for my brother. And I said, but what are you going to live on? Yeah. So to me, it's been a fantastic social and economic sort of experiment.
So who's using it now? And
so we haven't made it let it loose yet, because I've been I've got sidetracked into my other business. So as with all these things, but also I think it was a little bit too early when we were trying to do it last time, because people were still too interested in Bitcoin and things like that, and they were distracted.
So now you've got gold as an underlying proposition. You're effectively testing out the product and service itself in various scenarios, right?
Exactly. So we've been
social and economic.
We do these little micro sort of experiments, but the basic thing is that we've now got a blockchain which we run for my other company, Clarency, which where we record all the KYC details of our clients, and in the business case, clients of the clients, as well as beneficiaries. That's all put onto the block. Every time they do a transaction against an invoice, a payment comes through us. We basically put the invoice or the other documents evidencing why that payment has been done onto the block. So we have a full record of the economic rationale of why people are doing things, which to my mind is what's missing in a lot of the anti-money laundering and other activity which goes on. Because you look at anti-money laundering, so right now on the 95% of payments which go through, which are clean payments as opposed to trade payments, the clean payments are essentially you get an MT103, which is a SWIFT message, and you get a line of reference data, but you don't know what that specifically is for or anything else. So what you typically get is if the bank at the other end gets a hit on the name or something, they come back to you and say, can you give us further details? And then you have to go back to the customer and ask them to give you the data to show why they've made the payments. We do that as a matter of course anyway, as part of our business model, because we're working in parts of Africa and elsewhere where otherwise we wouldn't get banking facilities.
So that's exactly the question I wanted to ask you next, is where all are you operating at the moment?
Yeah, we work globally. We have customers in the Cook Islands, we have customers in Vanuatu. Yeah, I was at one stage aiming to be the largest clearing and settlement organization in the Indian Ocean.
How many people are using it today? I mean, if you're international,
we've got we've got a reasonable number of customers. We made a good profit last year, so in the year before last, and but what we've been using the blockchain for up until now has been very much around sort of how do we monitor what the clients are doing, building up that record. Now, of course, what we can do next is we can then add the asset management sort of piece onto it, which then sort of links it back to the gold or to whatever other asset we decide we want to accept. And then what I've been in the process of doing at the moment is talking to a couple of banks about sort of the potential for them to use those assets as a way in which we can then secure a line of finance.
So I think it's extremely clear from this conversation, you have no lack of experience when it comes to finance or financial technology or implementation of technology at every level of financing for businesses or consumers. There's absolutely no doubt about that whatsoever. I think the next thing is to understand is you've already an international company, you're already profitable from what you're telling me as a startup. I mean, this is unbelievable. So what's next for you and the team? I mean, how big is the team? I'm super curious.
Well, the team's small. Is what we've done is I'm very proud of the team. I have to say, is we built a platform which we call Noah, and we named it after the son of our API developer.
Oh.
And he's a nice guy in India, and he's a very valuable member of the team. So we named it for his son. But actually what we did was we took something actually very cheap. It's called Salesforce. We then created on that the ledgers. We created the all the processes, and we create the APIs around Salesforce, and we bring in the data via Salesforce, and we push out the data and the payments out via Salesforce. We're now in the process of partnering with a company called Form3, which is one of the big up-and-coming fintechs in the UK. So we're working with them to go live on Swift sometime later this month.
All right.
And Swift will then give us access directly to financial financial intermediaries around the world on a secure way.
So how big is the team now, by the way?
We are 7 people.
And I mean, how does Salesforce see your interaction? Have they picked you up on their radar yet?
No, not really. We've not really tried, to be honest. I've only recently learned about this thing called stealth mode. We naturally wanted to do that. To me, this has been a learning of my previous way of doing things, which was instead of going out raising lots of money, we raised no money at all. We did this all bootstrapping and everything else.
Amazing.
And because we had some good supportive customers who valued what we were going to do, they effectively have invested in us to help us to do what we're doing by giving us their time, giving us their volume, etc. So we got one bank, which is a DeFi bank, for example. They lost their banking at that time. I said to them, "Well, look, I can open an account for you. Why don't you let me do that?" And they're fantastic partners. So my operations teams and their operations team work hand in glove together. So yeah, and equally with our sort of other customers, we've got the same sort of relationship, and also with the clearing banks that we work with as well. So we explain to them what we're doing and why we're doing it and how we're doing it, and we have an active dialogue with them to take that, and that's allowed us to build a solid foundation. So instead of me going off and showing people lots of PowerPoint slides, I can show people that the thing was actually working. And
so Bob, I think what I would love for our audience members to know is what's next for Clarency then.
Well, next, we're having discussions with some of the big network card operators, let's put it that way, about sort of how we can plug into them. The thing that's been fascinating for me is we started off at the sort of the difficult end of the marketplace. But gradually, as we build our capability, what we're finding is that the more mainstream players are beginning to come to us and ask us to do things for them. So, for example, on the FX side, we've got a couple of tier 2 banks which are coming to us, so can we do the FX? And the reason for that is because if you go to the cost of running a financial institutions team inside the bank to then do the network management and everything else, it costs you about £1.5 million per quarter per country to do the annual analysis of a country, and if you only do 10 payments into that country a year, it just doesn't work. So because we've now built this extensive network and we're able to access that's the first part, leverage our network, and to really, I always use the analogy of the sausage machine. Push in pork at one end, push out sausage rolls at the other end. Yeah. So it becomes seamless. Or you can look at it as fluid dynamics the other way, looking at it. The next part of it is then to say, okay, well now, can we replace, for example, some of our clearing banks? So they probably shouldn't hear this. Can we replace clearing banks with gold, with digitized gold? So instead of us having an account with a bank, we'll have an account with ourselves in digitized gold. And our customers will have accounts with themselves in digitized gold. And that's the next sort of step of where we're trying to get to, is to get to the point where sort of each of my customers will no longer be my customers, they'll be my partners, because they'll have a digitized lump of value sitting on their part of their node, and I'll have my lump of digitized value. And when they want me to make a payment for them, they'll just pass the piece of digitized, assets to me, and I will then use that to make the payment for them. Or alternatively, I'll borrow the money from a bank to then make the payment in the right country.
I think if your fundamental principle is maybe perhaps partnerships with people who are holding gold or the approved, certified, verified, regulated gold entities effectively in countries on the basis of which you're operating, right? Your product and your service. Who is your biggest partner in waiting, where you think after you've clicked with one or two partners on that fundamental itself, everything else from there is just much more open for you in terms of the kind of customers you can get from not only a consumer level at a microfinance level, but perhaps much larger people that may want to shift
Yeah,
the basis of and fundamentals of how they're operating and doing their business.
No, exactly. Well, I think if I look at the JP Morgans and so on, they should be very interested in what we're trying to do. Yeah, I think from a cash management point of view, it works. From a asset liability management point of view, it works. From a credit risk point of view, it works. Yeah, there are so many things which go in my mind for it. Yeah, at the end of the day, why do banks go to all those troubles and raise deposits? There's liquidity, but if they can create liquidity through another mechanism, which is a more efficient mechanism, they should be creating liquidity that way. So when we look at things like trade finance, for example, the ability to link the transfer of value to an event, which is essentially what trade finance does, which is you present this document in this way, and I'll present you with the value the other way. That stuff should be working very, very easily right now. I did some experiments a couple of years ago at Standard Bank where I think we had a fish importer in Japan who was importing one end, and Panasonic who was exporting to South Africa at the other end. And because we got the documents before the ship had actually been loaded, we could actually pre-clear the shipments before the ship had even left the port. Now, of course, you've got some risks, the ship might sink and things like that, but that's why you carry insurance. But fundamentally, we were able to do that. Companies like, some of the Brazilian companies I worked with, similar thing. We were able to create value for them because they can see what's happening with their future value. And once you can see it, and once it's secure, you can actually then leverage that. And you can start borrowing money for that. You can raise working capital against it. So there's a whole series of things which I think we can create the conditions to happen about. But the fundamentals is build the right base.
I'd be super curious to see you having conversations with entities like bKash in Bangladesh, or even Tala in Africa, or maybe even MarcoFi in LATAM, or even working with people like Arrival Bank that are doing accounts in Puerto Rico for United States companies. I think it's super interesting to see how those conversations would evolve and how those businesses would mature and those people would benefit from what you're doing. But sadly, looking at the time right now, I've got, we've got to wave off on this, and I think we have to have another episode. But I have to say, Bob, it's been a historical journey. It's been a wonderful journey, and thank you for enlightening us. And with that, I'm gonna have to step off and hand back to Ronit. But thanks, looking forward to speaking to you again. It's been a pleasure. Thank you for your time.
Bob, one last question. If you were 23, obviously you are, but if you were 23, what would you be building today?
If I was 23, I would be looking at how do I create my own personal value.
Go on.
So we all start that journey where essentially the first thing we own is a credit card, and we own the credit card debt. But then somehow we pass over responsibility when we start accumulating assets. So I would be right now, I'd be thinking about ways in which I could create my own personal store of value, which could also include things like the way in which I use my connections and my network, things like that. And then I would then be trying to come up with a real understanding of what that value is. Because I think the things I really learned is that one of the first things is one of the nice things having a relationship with you for 27 years is that to try and get on with people, to understand the network, to work with people.
Yeah.
The market is so huge. There's no point in trying to keep things secret. And I think as a 23-year-old, it's that understanding that get out, talk to people, understand how you build your own capital stock for yourself as an individual, and how that then gets conveyed to other people in terms of what they think they can achieve using your relationship and what you can achieve using their relationship. and of course have a great deal of fun trying to do it as well.
So your network, build your capital, have fun, and the world is huge. Make it your oyster.
Yeah, and when people say to you, "Oh, well, we tried that sort of 3 years ago or whatever," don't listen to them. It's amazing what we can achieve with the technologies that sort of are becoming available to us. Yeah, like your conference the other week. I'm still trying to think about what I would do with laser-powered quantum computing. You know,
that was clearly the session I wasn't hosting.
Yeah, but it's fascinating because you think about we're just struggling to get to real-time payments in America, and people are already sort of firing laser beams at each other and creating completely non-linear computing capacity.
Yeah, well, I think the real-time payments journey in the US is for another call. I was just writing last night or the night before about Nigeria's experience of real-time payments, which is over 10 years old now.
Yeah, exactly. But you still can't make a payment out of Nigeria without the permission of the central bank.
It's another story for another day.
I feel like we're leaning towards part 2 of Confessions of an Economic Hitman, except it's just where we're sort of getting to this conversation point where it's like point of no return.
Absolutely, yeah.
Podcast host and Bob disappear.
He worked for the MOD, where it was like one of those disavowed units. The man with the golden ledger.
Bob, I think it's time for you to write the update, the digital version of Confessions of an Economic Hitman.
Absolutely.
I think
so, Bob, thank you so much for joining us today. Let's wrap up before we go into the second hour.
It's been absolutely
It's been a pleasure to have you along, and keep building.
Thank you.
Thanks, Bob.
Cheerio. Bye-bye.
Bye.